All right, guys, welcome. Let me know if you hear me clearly, please, in the comment section below. All right, so I thought I'd do this live because this week is actually a big week for tech stocks. And as you guys probably know, I currently have a collaboration with Stake, Trader v Trader, and I specifically chose to invest in the tech sector. So, with pretty much how many of these we got? We've got six of the biggest tech stocks all reporting their earnings this week. Today it kicks off with Tesla. So on the roster we've got Tesla, Amazon, Facebook, Alphabet, which is Google, we've got Apple, and we've also got Microsoft. So those companies, they pretty much represent a fifth of the value of the S&P 500. As you know, Tesla is the largest cap company among them. So, this is a really important week. Actually, when you look back on the records, this hasn't happened. This has only happened 5 times in history where all of these 5 companies are reporting their numbers during the same week. So with this, it's going to be an important week for me because obviously with the challenge that we've got going on at the moment, I hold quite a few of those. I rejigged the portfolio slightly today in favor for Tesla. Because I think, and we'll talk about Tesla in a moment, we think that they're going to hit their delivery numbers, but whether it will still be counted as a miss against what the S&P 500 expect of them, we will see. But looking at the stock today, it's traded sideways a little bit. It hasn't really moved up that much. So they're reporting after hours. So literally in the next 2 to 3 hours, they'll be reporting. If I've got my timings there right. But yeah, they're reporting. I think it's 6 p.m. I think it's Eastern Standard Time is their time zone. So we'll see what happens. But there are 6 companies altogether, and I guess that if you are invested in the tech sector, you will be interested in these companies specifically because look, let's face it, these are the big blue chips. These are the companies that most people will be looking at if you're looking at the tech sector specifically, and they are big companies. So like I say, as you guys probably know, I'm really passionate about Tesla. I've got Tesla already within my systems. I didn't sell and systems Manolis. Just seeing that now. I haven't sold them. I still got them in the portfolio. I did jig a couple of them around today to get more allocation to Tesla. We'll see whether that was a mistake or not in the morning, but who knows? So yeah, I mean, these are probably the companies that you're looking at. There are some key considerations for some of them that I guess are the things that I think some of the professional investors are going to be looking at, and maybe you'll be considering as well if you're holding these companies specifically. If you start at the top and we start having a look at the likes of Facebook and Alphabet. So Alphabet is essentially Google's holding company, parent company, and obviously they own YouTube, which is what everyone's watching me on right now. So just looking at some of the preliminary numbers that are actually going in there, just in terms of sales, and this is specifically looking at advertising revenue, advertising numbers specifically. Alphabet are estimated or projected to announce figures in the region of about $51 billion. And that will be an increase on last year of 25%. If you look at Facebook specifically, they're looking at reporting around about 24 billion, which will be an increase of 34% last year. So these two as a pair are getting really great kind of like increases in sales. Now, the question is, how much did the pandemic have to do with that? With people being captive audiences at home, did it have an impact? We don't know. Is that going to be sustainable moving forward? We don't know. There is a lot of speculation around the consumption habits of the general public. So there was a report that was talking about the fact that more people will be watching YouTube than normal TV in the next 2 to 3, 4, 5 years. And that's where they feel advertising revenue is going to go. It's going to go onto online platforms like YouTube, like Facebook, for example. So Whether this level of growth, I mean, 25% and 34% up from last year, is sustainable moving forward outside of lockdown when everything is back to normal, is questionable at this point in time. But I think the long term projections for where the advertising revenue is going to be spent, and it's not just, physically watching content. We look at the way people are consuming content online now. Yes, YouTube is a really big portion of that, and there's more and more information that you can gain on Facebook now on the video streaming side to things. I think that's one proponent, but you got to think about the fact that even from Facebook's point of view, Instagram and how important that is, ad revenue going to those avenues are really, really important. So, two good companies. I think ultimately, I would expect, that their share price ticks up this week, because I don't see how they can report those numbers, if those numbers are correct, and not see a positive push on the share price. This should push them to the upside, I think. Obviously, there are threats and issues with online businesses like these. I think Canada recently just announced that they're going to be regulating, I think it's either Google or Facebook, one of the two, but they are going to be introducing regulations into them. So that will be a threat. That will mean that they'll have to take action to ensure that they're meeting the regulatory parameters that Canada sees fit for their systems. And if I'm completely honest, I think that there needs to be a little bit more of that from a global point of view. I mean, just look at my experience over the last week or so, where someone's cloned my entire Instagram account and is using my likeness to try and pull people into crypto trading. Instagram haven't done anything about it because there is no regulation. They're not required to do anything about that. I'm trying to send emails and tweet them and all this kind of stuff. You get absolutely nothing from them. So I think regulation in this space will mean that there are so many issues with social media as a whole, and just this content proliferation. I think regulation will be good. So will that be a threat to these companies moving forward? Potentially. Will it hit their revenue streams? I think a lot of them are very conscious about the kind of ads that they essentially run. So you may see a little bit of an impact. Would it be a huge impact? I wouldn't think so. I wouldn't anticipate that. But regulation, I guess, would be a big thing for them on there. So I would expect that both of these would tick up this week. I would hope. Anyway, again, this is just guesswork, guys. Who really knows for sure? Then we've got Amazon. Amazon numbers are actually looking to be really, really good. I haven't got the numbers here, actually. But there was one big concern that a lot of the analysts have been speaking about today, and that's the fact that Amazon, if you look at the share price, has absolutely killed it this year. Let me see if I can actually just bring this up, and I'll see whether I can actually share with you guys. But Amazon have done really, really well over the last 12 months. Just think about it through lockdown, right? Whilst everyone was at home, not able to go into their normal channels of retail shopping, people have done that online. And Amazon have been the main beneficiaries of that. And if you think about Amazon specifically, one of the big concerns that the analysts have at the moment is how sustainable is this going to be? Much like Google and much like Alphabet, how sustainable is it going to be moving forward once we come out of lockdown? Is it going to be massively impacted? There's, obviously Jeff Bezos has stepped away from the business really to focus on some other things. Let me just bring this up, because this is, if you look at the chart, it's absolutely insane. When you look at how well, I need to change these over because I don't want candles for this. Won't make any sense. I'm just going to see if I can share this. 1 second, guys. So let's share this one right here. I mean, so look, this is, Yahoo Finance. I mean, let's just go back out. Let's go to, this is on Yahoo Finance, and this is looking at Amazon. I mean, if you go back out to, these kind of dates right here, what we've got here, this is back in, what date is this? This is May 2019. Look at the share price right there. It opens at $1,760 a share to where we are right now. I mean, when did this peak here start? I mean, this started in March. So literally in the UK, as we were going into lockdown, look at that huge growth up to where it is right now, 3,421 from what was that, 1,922. So if you'd been invested in Amazon, during this period of time, you would have returned extremely well over that period of time. There is still a big concern amongst the analysts moving forward. I think they will report good numbers this week because they have to, given that they would have to report really, really good numbers. The question is, how sustainable is that going to be moving forward once we come out of lockdown and once people adjust? I think one of the things that may be a big consideration for companies like this is the fact that whilst people will still go back to the traditional means of shopping, because I don't know about you, I still like to, touch things and feel things before I actually buy them. I bought a lot from Amazon in terms of just like things like equipment that generally speaking, I would want to go and touch it and feel it. If I think about my experience specifically, I think now that I've got to the point where I'm able to do it on Amazon, it's so simple and returns are so easy. The question is, will people naturally just keep the habit and continue to use them in the way that we have because we've now had our eyes open to a new way of shopping? That's a key consideration for that. But I think the numbers will have to be good off the back of this. I mean, you couldn't expect them to be anything but will it be sustainable over the next 12 months? Who knows? But this will be a really, really good and interesting report to see. They actually report on Thursday. Reporting today. Amazon report on Thursday. Facebook and Alphabet, Facebook reports on Wednesday alongside Apple. And then we've got Alphabet, which is Google, and Microsoft, which we'll talk about in a moment, each reporting tomorrow on Tuesday. So it'll be interesting to keep an eye out for those ones. Microsoft in itself, if we look at Microsoft, actually, I do want to do one other thing, actually. Let's have a look at Amazon right now, actually, and just have a look and see. Oh, this is actually, I wanted Amazon. There we go. And just see how they are rated right now. See, amazingly, according to this, Amazon stock is still undervalued. Amazingly. I mean, even with, what's the current share price of $3,340, that's still undervalued by 22.7%. I mean, that's saying fair value is 4,321. That's the analyst rating for these guys. And I'm using Simply Wall Street here, guys. It kind of helps you digest this information and break it down a little bit easier so you don't have to, kind of run numbers when you're looking at financial accounts. It's a really, really good tool for you to use. So according to these guys and analyst ratings that they aggregate, Amazon's still actually undervalued right now. Will that remain the same? Be interested to see once all the numbers are actually reported, but I wouldn't expect to see much of a deviation from there. So that's Amazon. We've also got on the list here, we've got Microsoft. I mean, Microsoft I actually hold within the portfolio. I've actually hold it in my own personal portfolio as well. So within the Trader v Trader portfolio, we've got Microsoft in there as well. And Microsoft is Microsoft, really massive, big, diversified business. They're doing a lot at the moment. They've just acquired a couple of companies, a company called Nuance, because they're trying to essentially develop some new tech. I think it's in the health field. And look, that's going to be groundbreaking. So they're doing a lot there. Obviously, the cloud services that they have, they just won a massive military contract for around about $29 billion. So the forecast for them, again, is expected to be pretty good when it comes to Microsoft. I would imagine that share price, again, would tick up. I mean, in my personal portfolio, they've done really, really well. In the Trader v Trader portfolio, although they were down on Friday, they have done really, really well in market open this week. And I think a lot of it will be down to what we've seen in the market right now. If you look at the markets, the S&P 500, the Dow Jones and the NASDAQ, they've kind of traded steadily today. And I think it is anticipation for these earnings coming out this week. And I think some of the analysts, when you watch some of the news that's coming out at the moment, is they are watching with keen attention as to whether these earning reports will send the markets into another growth spout because of the confidence that it will deliver if the top six companies in the S&P, or the largest six tech stocks in the world, all report really good numbers? Will that imbue confidence? Will that lead to further injection of cash and further investment into companies, meaning that the various markets will increase over and beyond where they are right now? So there's that question. There is that almost undertone of excitement bubbling underneath around what's going to happen with these. But I think Microsoft, I think, will do really, really well as well this week. I at least hope so for my portfolio, because I need the good returns for the 6 week, and we're 3 weeks in right now. So we've got 3 weeks to go on that challenge left. Then that brings me on to Tesla, which is, the one that I love a lot, clearly. But it is one of those ones where you just don't really know what's going to happen. I did re-evaluate the portfolio this morning in the Trader v Trader challenge, just to give myself a little bit more exposure to Tesla. I mean, it's a volatile stock. So within volatile stocks, there is an opportunity if you're looking to trade and looking to get a little bit of return, particularly if you're going to be looking at profit taking. So I've rejigged to kind of get a little bit more exposure to Tesla for this. However, with you look at the quarterly earnings for Tesla historically and the reporting, sometimes the stock doesn't really do much. I mean, a lot of the time it's kind of expected anyway. I mean, I'll just share this with you as well, because if you look at the numbers that they're talking about now, and I personally think that these will be achievable numbers. So if you look at Tesla in their production run all the way through 2020, I mean, the Model 3 and the Model Y have been huge to the delivery numbers and the production numbers. So as you can see there, 509,737 total units produced. They delivered 499,550 cars. And that was just in Q4, this is how many they delivered. And people were really optimistic about these numbers, although it didn't really move the share price that much. Now, total 2020, just under 500,000 cars. They are projected for 2021 to hit around about 800. Some people are speculating 900 million cars the next 12 months. The bulk of them will be Model 3 and Model Ys, which are the more affordable versions of the model of Teslas, essentially. So I've got a Model S, and as you can see here, through 2020, the Model S and the Model X. So the Model S is the one that I have. It's like the luxury sedan. Then you've got the Model X's, which is kind of like it's equivalent, same market as things like Range Rovers and stuff. Their production numbers and delivery numbers have fallen significantly. I mean, it's proportionate to what we've got there. So if they're able to achieve 800 to 900 units, even 1 million units this year, that will be really, really, really ambitious. And I think the markets are really paying attention to what those forecasted delivery numbers are going to be this year, because that is going to give investors a little bit of confidence around the direction of the business, whether they're going to be profitable, so on and so forth. It'll be interesting to see in the reports this week whether they actually turn a profit. How Wall Street views the delivery numbers versus their expectations of the business are two different things. So the last one, it was a miss. They missed their earnings call. Many people are expecting the delivery numbers to be good in this reporting period, but they're half expected them to miss their earnings call. So what happens with the share price after this will be anybody's guess. It really depends on sentiment on Wall Street and how they take the news. Sometimes it doesn't move. Sometimes it signals a little bit of a sell-off. But it will be interesting to see what happens. But I've got a little bit more exposure, because I think if the numbers are good, you just don't know what the numbers might actually say in terms of whether they hit or miss their earnings call. I'm willing to take that gamble personally. But with Tesla, obviously it's an overvalued stock, and there are lots of reasons and lots of things that you can start talking about when you have a look at the value that Tesla brings and whether it's overpriced or not, and simply the market cap. The numbers are staggering. The numbers are huge. They're really, really big, because a lot of the future sales of cars have already been priced into this. You've recently seen the likes of Kathy Kathy Woods actually selling down some of her Tesla position. Certainly in April, I think she sold some. I think see if I can actually find it. Actually, she sold. I think it was about 156,000 shares or so on the 26. And so people are a little concerned around. Okay, so what does it actually say for Tesla specifically? Um, I think that I mean you're never really going to know or understand exactly why she's decided to sell down her Tesla position. She may just be looking to get a little bit more diversification within her portfolios. She may have spotted another opportunity, but she has sold quite a lot. I'll see if I can find it just to show you guys. Within the portfolio, a lot of Tesla over the last few weeks. So this is, if you go onto Kathy's arc, you'll be able to see this on here. So, right, Tesla. So on the 21st of April, she sold 163,981 shares. If you, let's have a look at this actually, see if we can actually get this number down and see what that actually means in terms of monetary value. Because where the stock has been volatile, and we've seen that the share price has dropped quite a bit, these kind of movements in the volume of shares that are being sold can and will impact the share price. So I think Tesla's at $739 right now. So that is on the 21st. By today's share price, she sold 121 million in Tesla stock. And that's not the only time that she's actually sold. So that was April 21st. She's also sold, I was looking at this earlier, when was it? She also sold on the 16th as well. She sold 86,715 shares. So that by today's share price is $64 million worth of shares in Tesla. And she's actually sold, I believe, earlier than that as well. Let me just go back up. And there on the 14th of April as well. So she sold quite a bit. That's 185,712 shares. So she's dumped quite a lot of Tesla in the month of April. Literally over the last couple of weeks, she sold a lot of Tesla. By today, that's 137 million. So 113, I think the first one was at 115 or something, plus 64, over 200 and almost 300 million in Tesla shares she sold. So does that mean that, there's something wrong with the fundamentals in Tesla? Does that mean that she's no longer really back in Tesla? We don't know. She's been talking a lot about NIO as an example. I don't know whether she's actually bought in here, because you can see everything that she's bought and she's sold. So let me just go back on this actually and see whether she's actually increased her position in NIO. I think regardless of what's happened in here, market sentiment is going to be really, really important. And these numbers that they're going to report this evening are going to be crucial to the share price, essentially. So it'll be interesting to see what happens to this week. I can't see any NIO on here in terms of any positions that she's actually bought. This report here, when you go onto the website, actually has a look at all of her positions across all of the ARK ETFs. So I can't see NIO as a position that she's bought over the same period of time. But it will be interesting to see what happens with these earning calls this week. If you are holding these stocks, my question to you is, what do you expect? Are you planning? Are you organized for this kind of stuff? If you're holding this for the long term, it doesn't really matter. You don't really need to do anything at all. For those people who may be trading, then potentially there will be a strategy in place, either to long or short, or maybe even scalp in on a day. But this week is going to be an interesting week for sure when it comes to the tech sector in itself. If the numbers are all great, then hopefully we see the markets go to another level. Hopefully we see a little bit of confidence in the sector and more money flowing in. Who knows? I think we've got to this point now, though, and I don't know whether you feel this at the moment. I certainly do in some of the conversations that I'm having right now, is I almost feel as though the last year we've been in lockdown and everyone's been so focused on getting their money right, making sure that everything is like proper tight, right? We've had a lot of time to reflect, to examine what we've been doing, and we've been looking at the important stuff. Investing is one of them. I just feel as though we've got to a point where we've got invest fatigue. Like after GameStop and all this stuff has happened, and someone mentioned this to me on a conversation earlier today, and I was like, you know what? It kind of makes sense. I feel that we've got to this point of invest fatigue where people have taken in so much information and looked at so many stocks and listened to so much news that all of a sudden it's kind of like, actually, you know what? We're just about to come out of lockdown. You don't want to be hearing any of this stuff anymore because it's kind of like it's important. It's been important, but it's not. It doesn't trump your day-to-day life, and neither should it. And I think we're getting to that point at this point in time where maybe, just maybe, people are kind of taking a little step back from, okay, look, maybe I researched this and, it's been great, by the way, but I've got other things that I want to get back to now because life is life and we've got some freedoms now. So I don't know. That's how I feel. I don't know whether you find that being consumers of this kind of content, whether that's true or not, but that's certainly what I've noticed over the last week or so, certainly with things starting to open up, that people are just eager to get on with life, and the work that you've done in lockdown hopefully sets you up to better things and to better habits and better financial decisions that are long lasting. At least that's what I hope anyway. If we got anything at a lockdown, I hope that's one thing that we definitely take away from that. Let's have a look and see what we've got in the comment section right here. Yeah, let's have a look at this. Oh, Evelyn, what's your opinion on DeFi stacking? I've got a considerable amount of NBN getting 8.49%. It's gone very well in the past couple of months. Unsure whether to cash out. Opinions. I don't know enough about it for me to be able to give you a really good, informed decision or analysis on DeFi. I'm still trying to kind of understand it myself. I understand how it works from a crypto point of view. Staking, it's used to obviously they almost loan it out almost, and then you get a return for that because you stake. So that's your staking reward. I completely get that, but I don't know enough about it to be able to give you like a dissection of, these are the key things for you to consider X, Y, Z, because I'm still getting to grips with it myself. I'm not really a crypto expert. I'm trying to get my mate Tyrone into actually my group first and foremost, then maybe onto the channel. But he is a crypto expert and he lives and breathes crypto all day long. And he's been saying, how important crypto is going to be, particularly Ethereum and Ether. The Ether blockchain. He's been screaming about it for years, how important that is going to be moving forward. So I'm trying to get him. He's going to go into my group first, and I'll see if he's got time to come on the channel because he will give really good insights. But I can't really give you a full analysis or thoughts on it because I'm not an expert in that field. So yeah, cheers, bro. Yeah, there's a comment on here. I think this is about, people watching more stuff online. I think it is going to be a natural progression. I think things like YouTube and just this online content consumption is going to just get bigger and bigger and bigger and bigger and bigger. I do think it needs regulation, though. It absolutely needs to be regulated. And I think Canada being the first to announce that, they are going to be forging the way when it comes to the regulation of this because it is absolutely necessary, particularly when it comes to, financial content like what I create here. You need to have some regulation around how and who and what is said in what manner, because ultimately it should be about keeping people safe and not hype. And I see a lot of hype in a lot of the content that's out there at the moment. This is a good one. What's your opinion on legislation affecting tax revenue? Several companies are biting back, possibly antitrust laws in America. Look, I think it needs to happen. If it affects the revenue, it affects the revenue. The thing is, right, you can't legislate for things like regulation or legislatory change. You just can't. And so what will happen is these companies will adapt. Hopefully what you're looking for is you're looking to have invested in companies that are big enough to adapt. So the likes of Facebook, Google, no problems at all. They will adapt. They will do what they need to do. if you had a small startup trying to enter into the space, that's when you would really ask the question of how significantly would those kind of changes really impact that kind of business. But for the big boys in the game, yes, their revenue might drop, but they're too big to fail at this point. They'll just crack on and do what they need to do. Yeah, Neo. You know what? Neo isn't actually in the tech, the Trader v Trader tech stock that I built, and I'm starting to look back at it because I've looked at some back data on that, and I think from when we started, it's up like 10%. And I wish now that I did have it in the portfolio. I chose XPeng over and above it. Now I've got Neo in my own personal portfolio. It's doing well, but I don't have it in the tech. I might need to reconsider that over the next week or so as I start to kind of move the portfolio around as we move into the last 3 weeks. But yeah, Neo's a good run as well. It's interesting to see the coverage of Tesla and the autopilot accident that happened last week. Just the false news that's coming out of the back of that is just it's laughable to a certain extent. But that's what you come to expect when you speak about Tesla. It's almost inevitable that they're going to get some bad press. People have less money to invest from now, that's for sure. Also, I know of people who sold positions to book holidays. Yeah, I can definitely get that. Absolutely. Because life and things that you weren't able to do or we weren't able to do prior to, freedoms coming back in become more important. They take precedent now. So it's only a natural thing. So it makes sense. All right, Bobo, your followers are with you, mate. Will be gone with people work the idiot out. Don't worry about it. Big up, man. No, I appreciate it. You know what? It's been really more than anything else. I'm disappointed in Instagram's reaction and lack of reaction or lack of action as a consequence of this. And this is where regulation needs to happen because ultimately what they don't understand is I create financial content. So if people trust what I say and someone's impersonating me, asking them to take up a trading opportunity, if they don't do their due diligence, they're just, oh yeah, cool, it's Pete, I'll do it. Then that people are losing money. Like people are actively losing money. And it is their responsibility as the owners of this platform to take action once it's reported, but they haven't. And the inaction is staggering to me. And what's the alternative? Well, I also apply to be verified. Well, apparently I don't meet the verification criteria, and the verification criteria is very opaque. Like, what is it? 10,000 followers? You need to be a celebrity? You need to have had what? What is the criteria? Nobody knows. You can't, when you apply for verification, add any context as to why you're applying for verification. Nothing. They just send you an email back saying you can apply again in 30 days. I mean, I've got a friend who's a producer, who's a musician. It took him like a year. It took someone at a label who has a connect in Instagram to get him verified. He tried that many times and was just told no. It was like, oh, I just can't be bothered anymore. And the label was like, we need you to be verified. So they had to take it into their own hands to get him verified. And regulation is absolutely required for instances just like this. And it is not just, it's about keeping people safe at the end of the day, period. And I think they have a responsibility as the owners of the platform to do the right thing and to do the right thing expediently as well, and not to be slow and drag their feet constantly. There's a question there. I've not looked into these. What's your opinion on shadow system? I've not looked into it. I need to do a full analysis in order to know monoliths. Yeah, so I haven't looked into them, so I can't really give you a view on it. Will there be earnings? I don't know. I think earnings will be good. I think the numbers will be good. Whether it will be classified as a beat by Wall Street, I don't know. I don't know. I mean, look, they can have really good numbers, but it can still be a miss like the last time. So I think because of COVID, and they've got some issues at the moment with, obviously they're building two new factories, one in Germany, one in the States. There's a global shortage on chips at the moment, so a lot of the car companies have had to actually slow down production of their cars altogether. That's going to be a big issue for people this year. So will it be a miss? I don't know. Probably. It'll probably be a miss, I would imagine. And it'll be interesting to see where the stock goes from there. Big tech is all about protecting people from online bullying, etc. But people getting swindled for cash can also be equally damaging to lives. Absolutely, it can be, and it will be, because and this is where I always say people need to be careful with crypto, because crypto is all the buzz right now. And guess what this guy's doing? In pretending to be me, roping people into a cryptocurrency scam. You know, so they do need to take responsibility. They need to be better. They really, really do. There's a yeah, especially considering that evil overboard is. Yeah, indeed, they need to do better, mate. What do you think about Churchill Capital? Are Lucid getting on board? Mm, I never really bought into Churchill in the first place. I mean, Lucid have been around for years and years and years talking about this luxury sedan and all that, which is fine. The simple fact is they don't have a car that they're selling. So for me, it's all about speculation. Um, they are they are speculating they're going to have a car that's going to do X, Y, Z. The prospectus paints it out to be great, but there are glaring holes. There's no talk about the tech improvements that you would expect in a car of that kind. Now there was just nothing there in the first place, so I never bought into it because I just didn't. For me, it was almost like every other week there was an EV company coming out. I mean, literally, there. I was reading something the other week. I think there were 400 EV startups in China, all barking or chomping at the heels of Tesla, trying to compete, trying to get market share off them. 400. I mean, how many of them are going to survive? It's the same thing here. Like, yes, they've got Chamath that came to be by a SPAC. They've got cash ready to deploy for the development and marketing of this car. But the reality is, from a technological point of view, they're still miles behind. They're saying the car's going to do 500 plus miles. Okay, well, the new Plaid S can already do that. Will do that already, and that is a car you can buy from next year. They're 2 years away from production, maybe even 3 years away from production. Tesla isn't going to stay still in that period of time either. So I never really bought into it. That doesn't mean that it's not a good buy for everybody else, but for me, I just didn't. Really. It was never something that I was going to buy because I just didn't. I wasn't convinced by the pitch. With the S&P at record highs and everyone seems to be predicting a crash soon, what's your thoughts? Hold cash or continue scaling in? Look, you can't time the market, mate. At the end of the day, it's impossible to do so. When is it going to crash? If we all know when it was going to crash, we'd all pile in with a load of cash, right? We'd all be trillionaires and gazillionaires as a result of it. If you're investing right now, just carry on investing. But you need to understand that if it does crash, what you invest will lose value. If you're investing on a monthly basis, you're going to get the pound cost averaging benefit. So you will start to ratchet up when the markets return to good standing again. But I think as first time investors, one of the things that isn't spoken about enough and it is not explained enough is the fact that the markets will go up or down. I speak about this all the time, but there is too much focus on, oh, I can make so much money. The conversation is never about how much money you can lose, because you can lose big on the market if you don't know what you're doing. You can lose big on the market if you go and invest money and it's like, oh, it's gone down, then you panic and you take your money out. That's even worse. We need to be prepared from a psychological point of view. And I talk about this on my course and people slate me for talking about the course, but the course covers all of the basics, like the investor psychology, that mindset. What do you need to have? How do you anchor yourself so that when the market is down 20%, you don't panic and think, oh my God, I want to get my money out. I don't want to drop anymore. I'm happy to take that loss. And you weren't thinking like that in the first place. What do you anchor yourself to so that you can, when the going gets tough, you remember that one thing and it keeps you going? How do you do that? This is all the stuff that I talk about in the course when I talk about the investor psychology. Um, so, for first time investors, I think a lot of first time investors who've been watching videos on YouTube may be in for a little bit of a shock if they didn't quite understand that actually the market really does go down sometimes. And you know what? When it does, it can be quite painful. And sometimes, the last market recovery took 5 years. It might be 5 years before you get back to your previous highs, which is where you start having the conversation around active management, passive management, and those merits start to come into the conversation. So there is a lot to it. I just think if you're a first time investor, you really got to hold your nerve. If you're investing right now, continue to invest. You can't time the market. It's near enough impossible to do so. So just make sure that you do what you need to do, invest, and keep your head down. And remember, this is a long term game. It's not for short term returns. It's not for short term gain. It is big boy, big girl stuff. There we go. See, I like this. Midas, you're a G, mate. You're an absolute G. So come on, guys. So there are 20 likes on here at the minute. There are 77 of you on right now watching this. Let's see if we can get this up to 40. I need another 20 likes if you can, please, because otherwise the YouTube algorithm is just brutal, particularly as everyone's coming out of lockdown at the moment. It just won't recommend it to people to view this video because I think he spent this time 40 minutes on a live, but it was rubbish because nobody liked it. So yeah, please help us out, mate. Just get us up to 40. We're at 32 right now. 40 will be absolutely great. Let's have a look at this one. 500 miles range in an electric car ain't much good to me. I've only done 1,000 miles since last March. You know what? See, I drive a lot. And my Teslas, I've had my Tesla for 6 years now. So my Tesla will do 220 miles. Actually, I did a drive yesterday morning into Bala in Wales. Beautiful, beautiful drive. It's about 140 miles. So I can do about 220 in mine. But like the new ones are just insane, mate. Like, Jesus Christ, man. Like once you get to about 600 miles, you can pretty much go anywhere that you need to go. And driving through Europe, it's free supercharging. It's amazing. It really, really is. What's going on, Joey? Does the course go over all the information to look at in terms of financials, also nibbling rather than piling in may be better at the moment? Okay. So those are two questions. No. The course is the basics, the fundamentals that you need to know. So basically, what it covers how to keep your money safe away from scammers. So what are the things that you need to do? So there's a checklist in there. It goes through investor psychology. So what is your mindset going in? It talks about risk. It talks about investment time horizons. It talks about risk management, why we invest, some of the myths around investing that still persist till today. Then we get into the whole conversation of asset classes, asset allocation, how portfolios are built. It talks about two ways in which you can invest. So do you want to invest in stocks directly, or do you want to go buy funds? Some key considerations for those. It then talks you through your taxes. So what are your tax allowances? How much are they? What you need to do to make sure that you're avoiding tax. And that's pretty much it. That is all about the basics. It's not about stock picking. I've got a course that I'm working on right now specifically for stock picking, which will also go through things like financials. That is a really big build though. So this course is $59.99. You can complete it in about 94 minutes, all online of your own volition. It's got assessments and stuff like in there. The second course that I'm building right now, I'm actually partnering with one of my friends who used to be an investment manager. He used to manage 200 million quid for a big investment house. So I'm doing it alongside him. We're building how you actually research stocks. So if you want to enter as a newbie, what's the first thing you should be doing? Because you just don't go straight in and just go Tesla. That's not, you just like throw in, give me the biggest fish, even though that fish might be poisonous and that fish is no good, right? What do you actually do as a newbie? So it talks about sector research. It talks about understanding what moves a share price, the flow of the shares available, a whole host of stuff. That course will probably be in the region of about 3, maybe 4 hours long. That will be proper in depth. It will go through financials. It will give you loads of tools as well that you can shortcut to. So if you don't want to learn how to read the financial accounts, you can get the information relatively easy. So that's a separate course that will be coming a bit later on. That's still being built right now. So we're just collating the information for it. All right. Okay. I think have I covered everything? I'm not sure that all of these. Oh no, there we go. I'm just conscious of time because I've got a couple of things I need to do tonight. Right, let's have a look at this one. Christopher. Hey Pete, any emerging market ETFs you suggest looking into? Look at the ones on Vanguard. I don't necessarily like. So people ask me all the time, what are the best index funds to go and invest in? If I go and say, right, go, the best one is this. If you go and invest in it, but it's not right for you because your risk appetite doesn't align with it. So for example, if you go into Vanguard, right, and Vanguard is the closest example that I can give to this, right? Vanguard scores 1 out of 7. So if you are, for example, a cautious investor, you shouldn't be going anywhere near an ETF that is rated a 5 or a 6. You need to be on like the low end. And they don't even have ETFs on Vanguard that are like 2s and 3s. Most of them are 4s plus. So if you're a cautious investor and I say, well, this ETF is great, but most of the emerging market ETFs within Vanguard are all 6s. Pretty much all of them are 6s. It doesn't match your risk appetite. Therefore, before you go and buy that ETF, you actually need to have a conversation around the investment time horizon, your goals. You need to understand how else you're going to diversify the money you're going in so that you can bring that score of 6 all the way down and counterbalance it in some way, shape, or form with something else in order to make sure that you're not overexposed on your investment approach, if that makes any sense. I know this is really, really technical stuff, and most people on YouTube won't give an explanation or explain this kind of stuff, but I know this because I've worked in the industry for a long time. These are the kind of things that you get taught to basically look at. It's all about risk management. People don't talk about this enough on YouTube, and it's a key consideration. It's not about buying the best ETF. It's buying the best ETF for you and your circumstances. So for example, if you're looking to invest for the next 25, 30 odd years, then great, go for something that's really, really high risk. You've got enough time. But if you're the kind of person where actually, you know what, let's just say, for example, 50, and you need the money in 5 years' time, you definitely should not be going for a 6 ETF in Vanguard or a high risk ETF anywhere else. And most emerging markets are really high risk. They're not developed markets. They're undeveloped markets. So there are loads of considerations you need to bear in mind. So, I would question, Christopher, do you have other investments that will counterbalance emergency funds? Emerging markets. Because if that's your main strategy, there's a big question mark. I would question mark your approach from a risk point of view. And I'll ask you, have you considered what your risk profile is? That's the kind of stuff that I do on coaching. Take people through a questionnaire to establish, right, in fact, you're a cautious investor. Then we can start talking about the risk that you're willing and able to take, because those are two very, very separate things. The risk that you're willing to take and the risk that you're able to take are two separate things. The risk that you're willing to take is based on generally your overarching financial situation. So do you have certain things in place? If you haven't, you might be thinking that on the scale of Vanguard 1 to 7, you're a 6. But actually, because you haven't got certain things in place, it means you need to come back and be a 5. So all of these are the kind of considerations that I tend to go through in coaching and things that you should definitely think about, mate. So I don't like saying, go and have a look at this emerging markets ETF, because it might not be right for you. And it's important to pick the right thing for you. There are so many resources I picked from watching your videos. Do you have a list of must-use resources? Oh, mate, there's a ton of stuff in my link tree. Someone said this to me the other week, and I need to actually do this. I actually need to I need to do a section on the website, number one, for frequently asked questions and popular resources. There's a lot of stuff that I provide people when I'm coaching and stuff like that. I question whether I should make those kind of things available openly or not. But then again, I also need to bear in mind that people that pay me for coaching as well should have access to certain things, and certain things should be available to the members group as well. So I need to do a list on that. But there's a lot of stuff in my link tree on Instagram, that is. Yeah, someone asked me this. I think was it yesterday? I did a live yesterday. Yeah, I did a live yesterday. Um, I think there may be momentarily. I think long term, no. At the end of the day, taxes are taxes. Like you got to live with taxes. There's nothing you can do about it. So, and his proposals aren't going to be kicking in for what, another two years or something like that. It's not actually law just yet. So a lot can happen between now and then. But I think at the end of the day, taxes are taxes. You got to pay your taxes. What are you going to do? Not invest because you're going to have to pay a little bit more tax and then miss out on market growth. Anybody who's savvy or even remotely aware of the return that they get in the markets will be like, oh, we'll just bite the bullet and just take it on as it is. And I'm sure there will be some tax loopholes somewhere that they'll be able to exploit to ensure that they're able to reduce that in some way, shape, or form. There always are schemes like that. All right. Okay. Okay. Quite a few questions here, and I'm conscious of time. So I was planning to do this for half an hour. We're coming up to an hour now. So let me just see if I can pick a couple more questions on here. One second. Uh, let's have a look at this one. Okay. Putting £50 a month in Tesla with the aim of cashing out in 2030, hoping it will provide a decent deposit on the car. Better than putting aside in savings account, right? Absolutely. I mean, yeah. If you're able to put money into Tesla over what's that, 9 years, the share price goes up. I mean, there are still people that will speculate and say that the share price will be over $1,000 at that point. You'll ride that wave up. So yeah, definitely. This is a good one. You should add your Tesla referral link to the description of your videos for the 3 miles. Actually, that is true. I've had two of my mates actually buy a Tesla in the last couple of weeks. They've all gone for the Model 3. And yeah, I can do that actually, to be fair. Because if people do look at buying the Model 3, that free supercharging actually really does help a lot. Actually, that's a good one. I might actually do that. Uh, This is a good question. There's a benefit to both lump sum investing and dollar cost averaging. If someone gave you 20K right now to invest in it right now to invest in an index fund, what would be your approach? Okay, so look, statistics tell us that if you had 20K and you invested in one go, or you spread that 20K over a period of time, statistic tells us that a lump sum investment will always do better than putting money into the markets on an ongoing basis. That's the numbers tell us that. So if I had a lump sum, I'll put the lump sum in. I wouldn't spread it over a period of time. I'm actually thinking of doing exactly the same thing at the moment. I'm just looking at what I want to do because part of me wants to go and put money into Tesla exclusively, but I also do know that I also hold Tesla and I don't want to be overexposed to Tesla. So Kathy Wood's Genomics ETF, I like what that is all about. I love what that is actually all about, in fact, to be fair. So it will probably go into that. But yeah, pound cost averaging. Pound cost averaging is great for investors who don't have a lump sum. And it just means that you don't have to worry about time in the market and trying to get that right because you're buying in every single month. So as luck would have it, you're going to get the benefit of the best value in the market at the given time when you're investing because you're doing it on an ongoing basis. But if you've got a lump sum, numbers tell us that it's always better to put that lump sum in than feed it in over a period of time. With that, you have to be happy with the fact that if you do invest, it could go down the following day, and that's just how it is. You have to strap in and enjoy the ride. Yeah, this is a follow up from Christopher. Yes, if you've got global, have a look in Vanguard, mate. I don't know who you're using right now, but Vanguard does have some really impressive emerging markets fund and ETFs. And actually, they did really, really well in 2020, actually, because they recovered a little bit faster from the COVID pandemic. So some of the numbers that you're seeing there are very, very good. So check out some of the stuff that's in Vanguard. All right, okay, there's only two more in here. Actually, there's one more in here. So let me just take this last one, Carnell. Thank you for your time, info, and consistency. There are many out there, but only a handful of real ones. I've been investing for many years. Nice to see someone similar doing the same. Thank you, mate. I appreciate that. Really, really do. I really do appreciate it. Thank you, mate. Like, YouTube is a very competitive place, I've found. Surprisingly so. Even with other creators not liking other creators. It's like, I really don't understand it. But I guess, hey, it's a dog eat dog world, right? I mean, Jesus Christ. But yeah, I appreciate you got time, guys. Oh, just as there's a little thing, and this may be useful to some people who are watching this. It may not, but from the all the way through last year. I mean, I started this channel last year, right? So all the way through last year, one of the big things that I was acutely aware of was I'm talking about investing money into the stock market, and it's like, well, that's all great and sexy and dandy, right? But if you don't have any surplus income, then how are you going to actually invest money? Particularly for people who may have been furloughed and been hearing all this hype about, oh my God, the stock market and all this money is being made and all this blah, blah. And then you can get into that negative cycle of, I don't have a job, things are going so wrong, everybody's making money, I don't have money to invest in the market. So one of the things that I really, really wanted to do last year was I wanted to do more and bring content to the channel that would exclusively talk about how you can build additional streams of income. And this has been in the works since like October, November last year. I got approached by another YouTube channel actually, saying, look, we really love what you do. This is what we do. We'd like to maybe do a collaboration across channels because we think that there is some synergy there. And it speaks directly to helping people actually develop something, a side hustle that they could then build later on to potentially take over their main income stream. And if we learned anything last year, that will be one of them. You can't rely on just one income stream anymore. You need to have multiple. So tomorrow and on the podcast today, we're talking about Amazon FBA. Now, without Amazon FBA, I've been on YouTube long enough and I've watched YouTube long enough prior to me being on YouTube to know that Amazon FBA as a topic is full of, I'm not going to say the word because it's impolite, right? And actually, the live that I did yesterday, I swore and YouTube did not like it. So I'm going to keep it clean. But let's put it this way. Unscrupulous people is the polite way to put it, right? Scam artists like promising the world, digital nomad, I make blah, blah, blah. You see the ads, right? And I hate that those ads actually appear on my videos sometimes. If only I could pick them, I would, right? But there's a lot of hype, a lot of selling the dream when it comes to Amazon FBA. And the reason why I chose to do a collaboration with this particular channel who's on the podcast today, if you've not listened to it, go and listen to it. It will give you a really good intro to Stephen, who's going to be on the video tomorrow. But the reason why I chose them is because they are based in Ireland and he does not talk any nonsense at all. He's real with it. You can make money on Amazon FBA. Yes, you could do 100, 200, 500 pounds, £1,000 a day, but you're not going to get there overnight. It's going to take you work. You're going to have to put in hours. You're going to have to put in the time to make sure that you actually build your business to the point where you can deliver that kind of revenue on a consistent basis. And it is ongoing work. So tomorrow we're going to delve into Amazon FBA properly on the channel. He's going to do a full tutorial of how it works, how to get started, all that kind of stuff. And then on Sunday, he's also going to be on a live Q&A with me as well. So if that is the kind of stuff that's interesting to you, or you know someone who might want to learn about Amazon FBA, get them to watch the video tomorrow, because it will be very, very informative, and I'm quite excited about it. We've been talking about this since like October, November last year, so I'm really pleased to get it out. Actually, to be fair, because it's been sat there for months whilst we've been trying to organize, trying to get these things together. Bobo, thank you so much for that super chat, mate. Trust me, it helps massively. You have no idea, because yeah, spending an hour and doing the prep for this and everything, a lot of it does come out of my head, but sometimes I do like to have, resources that I can show you. So just trying to prepare the resources, it really, really does help. So thank you so much. I really, really do appreciate it. Every little penny helps. So, all right, cool. I don't think there's anything else on here. That's it. All right, cool. Cheers, guys. I appreciate you. Thank you so much for watching this. I will see you tomorrow. I'll probably do a live midweek. Once I rejig the Trader v Trader portfolio, I'll probably do a little bit of an update on that as well. But guys, have a good evening, whatever you're going to be doing. Cheers.